Hi friends, welcome to Adda 24/7. Today's topic is central banking discussion. Now what is central banking? We have the elective, right? Those who have taken this elective, this is one of the toughest electives. Why am I saying so? Toughest electives? Because the point over here is it is totally related to RBI. And RBI constant changes do happen on a daily basis, on a hourly basis you can say. Okay, so that's why this is very important. Now we have discussed up till now module A, B and C in previous Thursdays. Okay, so this time we'll be discussing module D. There are total up to F modules we have. Okay, F modules means A, B, C, D, E and F. 6 modules you have. So today we are discussing module D, and then next week we'll be discussing E and F. Okay, then F. Okay, so let's start here. Firstly, what I would suggest is everyone should firstly download Adda 24/7 app on your mobile. In this app you'll be getting all the premium study materials plus live classes, ebooks, notes, tests. So whatever you need for CAIIB, you get it over here. Okay, the portion has changed, so new syllabus. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel, remember, you'll be getting all the updates for JIB, CIB and various banking exams. Also, importantly, what you'll be getting is the free YouTube series. All the topics free YouTube series. You are getting it over here. So subscribe to it, click on the bell icon, because this is very important. What happens is whatever is available free, you should definitely go for it. Also, this is a new batch which has just now started. Everyone should take advantage of this batch. 80% off is going on. See here, all the 4 subjects ABM, BFM, ABFM and BRBL are covered. Numericals, objective questions, theory questions, case studies, whatever is required is covered. Okay, 80% off going on. Double validity on Mahapacks. Now what is this Mahapack? Some of you don't know what is Mahapack. So we have 15 plus batches. 15 plus batches in the single fees. Okay, so that's why look at this. So this 15 plus batches, you get it in single fees only, right? So that's why you should definitely go for this. Now let me start the discussion on this. Module D is basically what? Module D is management of foreign exchange reserves and constituents of Indian financial markets. So it is divided into 2 parts basically. Management of forex reserves and constituents of Indian financial markets. Now remember, central bank or RBI, one of the main jobs of central bank and RBI is management of forex reserves. The main 2 jobs of central bank are any central bank. The main 2 jobs are, one is inflation control and second is forex reserves. There are also other miscellaneous jobs, like for example banker of the banks, supervision of the banks, then banker to the government. Yeah, these are also, banker to the government forms a part of that inflation only. Okay, so important part over here is management of forex reserves. In module D we will be discussing, and constituents of Indian financial market. Now what do you mean by this constituents of Indian financial market? Understand one simple logic. Okay, firstly, what did we say? Earlier we used to say that RBI is the body governing banks, but nowadays what has happened? RBI has become a model for, or governing model for, not only banks but NBFCs, e-lenders. E-lenders have come up a huge part now. Okay, so that's why e-lenders, NBFCs, all have come under the jurisdiction of RBI now. Okay, yeah. So move on now. Let's start with the topic. Yeah, move on with this. So the point over here is module D, management of forex reserves. So what are those forex reserves? What will you study in this topic? That is also what we have to see. So what will you study? First is, see this, legal framework. Now what is legal framework? Legal framework means under which acts does this forex reserve come in. All the acts. Forex means FEMA Act, you will say, or then RBI Act also 1934. So all the various acts under which this comes in, this forms a part of legal framework. Then you have risk management. What are the various risks in forex? Okay, there can be various risks: market risk, operational risk, credit risk, all the risks, systemic risk. All the risks do come in this in forex, because you are actually in forex. What is happening? You are fighting with the unknown. That's the basic problem. Okay. Then you have operational risk and control systems. What are the control systems for operational risk? Market risk you can control, but you can definitely control the operational risk and credit risk. Transparency and disclosures. Transparency means basically this is a governance part. This has become a very important issue now in all the organizations. Governance. Okay. Governance means how do I display or show my financials or show my all the shortcomings as well as the strengths to my investors. That is basically transparency. That is governance. Okay, disclosures. Recent developments in the movement of forex reserves. So what has happened recently? What has happened recently? Because of this Russia-Ukraine war or the COVID situation, there was a huge turmoil in the whole market. So these developments are traced over here. Sources of accretion of forex reserves. Now, what is this accretion? I don't know why these books or these big institutions, why do they use such difficult words? Accretion means basically accumulation, collection. Sources of collection of forex reserves. It's that simple. So from where do I get the forex reserves? You can guess here. Remember, one basic rule is from the country in which, okay, the country in which the currency exists, you have to get that currency from that country only. Means if you want dollars, you have to get it from USA. If you want pounds, you have to get it from this UK. Okay. Similarly, means what are the sources of accumulation of these forex reserves? If you want rupees, you have to get it from India only, isn't it? Adequacy of reserves means what is the adequacy means? Are they adequate? Not too high, not too low. If you have too low reserves, then what happens? Too low reserves. Then we become Sri Lanka and Pakistan. No forex reserves. If you have too high reserves, then what happens? Then also money gets locked over there. Why do we need too high reserves? Whatever is required for your daily use or your some buffer stock, that much is enough, isn't it? Then you'll have management of gold reserves. How is this gold related to this forex? Always remember, these are all related items. Dollar, gold, oil, okay, and equities. And bonds, basically. Yeah, these five things will always be related to each other. When equities go down, gold will go up. When debt goes down, gold will go up. When property goes down, gold will go up. So these are all related. So gold will always be a prime source of reserve for any central bank. Investment pattern of foreign currency assets means how are foreign currency assets invested. Now what do you mean by this foreign currency assets? What do you mean by this? Foreign currency assets means, remember, if I am having, let's say I am Tata, okay, let's say I am Tata, I am not Tata, let's say I am a Tata company and I buy Chorus, a steel plant in Europe. I buy that JLR. Okay. So what am I doing? I am the asset of that country, and the money of mine is being used by the country, or it's spreading the name of that country only. So these are called as foreign currency assets. All the private companies also form the part of the currency which they have. They also form the part of this foreign currency assets only, and how they are invested. So that depends on FEMA. So here FEMA comes in picture, isn't it? Other related aspects. Other related aspects means what? Related means what? Other miscellaneous aspects. So importantly, here the topic discusses what are the investment patterns of foreign currency assets, means what all are the privileges given by RBI for investment or into foreign countries. Okay, That will come under GNP, gross national product. Okay. So got this point? Management of forex reserves will have all these topics over here. So we are discussing this everything over here when we go into the class. Okay. Yeah. Let's move on. Next part is constituents of Indian financial system. Now tell me, what is this Indian financial system? Indian financial system consists of, what is it? It consists of all the elements. What are the elements in the Indian financial system? Number one, let me see, banks. Okay. I'll just give 4 or 5 over here. Banks. Then what? NBFCs. Right? This financial system consists of all the elements. Importantly, RBI. Right? Reserve Bank of India. Okay. NBFCs, RBI, then this FIS, financial institutions. Okay. Means these financial institutions, plus then there will be e-lenders also nowadays. E-lenders means they have these are all e-lending companies. Then we have cooperative banks. Remember, cooperative banks. So all these things, these are just few. There can be thousands. So all these form the part of Indian financial system. What is the financial system? Financial system is basically give and take of money, exchange of money between, or the this currency between the various constituents of that economy. And who plays the main role? Main role is played by RBI. This acts as a catalyst for all these. Because of RBI's repo and reverse repo, because of RBI's MSF facilities, because of RBI's OMO facilities, all of these can function. If RBI's this currency, this printing currency, or this credit policy goes in the wrong direction, all these will get affected. Always remember. So that's why Indian financial system will include all these elements. So what is this? Let's see. Genesis of financial market development. Again, difficult word. Genesis. I don't know how many of the bankers understand this word genesis. We don't. Genesis means origin. From where did it originate? How did the financial market develop? Okay. Structure and growth of financial markets in India. Okay. How did this financial market develop? See here. Earlier we all had gold coins, right? Earlier we read in our history that this king had gold coins. Then we had copper coins. Then today what do we have? Today we have paper coins, paper notes, isn't it? And now we are moving towards paperless. So everything is, the more it becomes simple. See here, gold is costlier, copper is a bit less costlier. Paper is the least costlier, and online is the lowest cost. So as we have lower cost of the currency, always remember, the country will grow in a better way. Lower the cost of printing currency or minting the currency, the country will grow in a better way. Always remember this. Okay. So genesis means origin of financial market development. How did this financial market development start? Structure and growth of financial markets in India. How did they grow? Grow means mainly, see this, before independence also these financial markets existed. All these nationalized banks today were earlier private banks. Okay. Means before RBI also banking existed. So how did this financial market grow? What is the money market? Okay. What are the 3 types of markets? Equity, debt, and liquid. Liquid means money market. Okay. What is the money market? So that study will be there. Money market means all the liquid bonds which have zero risk, sovereign risk. Okay. That is known as the money market. Government securities market, right? Similarly to this. Okay. In money market, mainly government securities are traded. So what government securities means what? Again, there are 2 parts in government securities. I won't go into details today, but there are 2 parts in government securities. Which are those 2? Number 1 is this short-term bonds, that is T-bills, and next one is long-term bonds. Okay. Then we have foreign exchange market. Foreign exchange market is also a part of Indian financial system. You will say, sir, forex is separate and this is separate. No, these two are interrelated. If the rate of dollar changes drastically, the expenses for India will also change, because we are importing country in oil. So expenses will change. So definitely if expense for oil will increase, let's say it increases. So what will happen? I'll have to spend less on the development. So every life will be affected in that case. Okay? Got it? Next one, foreign exchange market reform, post-reform period means 1990s to 2010. Post-reform period means what are the changes which have happened after 1991 opening of the economy. Okay, well, that was one of the best steps. Okay, everyone lauds it, everyone. So after that things changed drastically. It was the need of the hour basically. Okay, at that time. Then foreign exchange markets. Oh wow, how the banking has changed. Here only after that 1991 only we got private banks. Because of these private banks there was the competition. Otherwise, wow, what were the rates earlier? For loan, the loan rates were around 16 to 17%. Now what are the loan rates? Almost halved, and now we are moving towards lower part, isn't it? So that's the way. Post-reform period, and as the time goes on now, the loan will get down to almost 2 to 3%. Okay, forex markets. Then post-reform period done. Financial benchmarks, transparency and governance frameworks. Here, transparency is there everywhere now. Without transparency, without governance, you can't function as an organization or as a country. Okay. What are the benchmarks on which we can base our financial systems? Benchmark means, benchmark can be the benchmark rates also, means repos and CRRs, everything. Okay, and the morals also on which we will be basing. Road for LIBOR transition. LIBOR transition means now RBI has given the freedom to the banks to move out of LIBOR system. What is LIBOR? LIBOR is London Interbank Offer Rate, that is for dollar basically. But RBI has given the freeway now to the banks to go for ARR, alternative reference rate. Alternative reference rate is one of the important parts, because if tomorrow something happens in London, then won't you get any rates? So that's why we are having ARR system. So that is the transition. LIBOR is getting transited now. It is moving out, and ARR is coming in. Okay, so that's it. That's the important part. Okay, now this was about module D. Now let me discuss about this. How to see here. You might have got the overall knowledge up till now for module D, and I've given you the brief idea of what that module will consist. But overall central banking is one of the difficult topics, and for that you need to have the batches. 80% off is going on, double validity is going on. Use the code Y432. All the 4 subjects you are having classes over your numericals, case studies, objective questions. How to get this 80% off using the code Y432? Okay, let me show you that. Okay, one sec. Let's go to Adda 24/7 live. If you are having the app, I would suggest go on the app. Okay, in app you are getting 1% extra. Okay, okay, let me show you. Let's go to Adda 24/7 live. Say this. Once you are on Adda 24/7 live, say this. Click on JIB and CIB. Then you will see the JIB, CIB, Mahapack, CIB 23. Click on CIB 23. You will see the batches. Look at the batch. Okay, May, June 23. Okay, this February 13th batch. Click on this batch, English batch. Okay, click on this batch. You will see the details of the batch. Details means what? What is the date? Then what are the timings? How many days are there? The batch is there. What is the study plan? Then importantly, I'll tell you, recorded videos 24/7 are available. Then two-way interactive classes are available. Two-way interactive means you can ask the questions there and then itself. Then ebooks are available. Then specially designed for May, June 23. New portion, remember, totally new portion. Now how to get the off discount over here? Look at this fees, 23,999. Click on view offers. Put the code Y432. Y432. Click on apply. Now look at this, 23,999 reduces to 4,799. This is a limited offer, okay, limited period offer, 80% off. You won't get this off every now and then, okay. So grab this opportunity ASAP. In 4,799 you are getting the full batch. That validity is 6 months. I'll give you even better option. Go for Mahapack. In Mahapack what happens? Look at the Mahapack, okay. So this, once you go to the Mahapack, look at the JIB CIB Mahapack. Click on this Mahapack. Now you'll see this, Click on CIB ka Mahapack. Once you click on CIB ka Mahapack, you'll see the details. Like, see this, 15 plus batches for ABM, BFM, ABFM and BRBL. 15 plus full length mock test. Topic wise question banks. Again, recorded videos are obviously there, okay. So you can check out this at your ease. Also importantly, look at this, 35,996. Click on view offers. Put the code Y432. Click on apply. See this, again 80% off, 35,996 reduces to 7,199. And look at the validity, 6 plus 6 months, 12 months. This 12 months won't last long, okay. This is only for the offer, okay. So 6 plus 6 months, 12 months over here and 7. If you divide the 7,199 by 12 months, how much are you getting? Okay, it's less than 600. Consider 600. If you divide that 600 per month by 30 days, how much are you getting? 20 rupees. Now if you, even if you think of yourself in the banking, you spend roughly 40 to 50 rupees on tea breaks, right? This samosa, this tea, coffee, everything. What are other things? So it is what? In the new portion, yeah. In the new portion, if you see, ABM, BFM, ABFM, BRBL, 4 subjects compulsory. Electives, rural, HR, IT, risk and central banking, no retail elective. So all subjective questions. Your dates are out, everyone. May, June is your CIB date. Registration from April, okay. So go for this batch immediately. Join